All right, let's get right into it. Today, we're going to crack open one of the most powerful and time-tested systems for finding stocks with absolutely explosive growth potential. So if you've ever wished for a proven, step-by-step method for picking winners, well, you are in exactly the right place. You know, this is the big question that legendary investor William J. O'Neill built his entire career on. He literally spent years, decades even, digging through charts of the market's biggest winners, looking for that common DNA, that secret sauce they all shared just before their prices went vertical.
And guess what? He found it. It wasn't magic. It's a methodical system that brilliantly combines a company's real financial health with the all-important timing of its stock chart. So let's break down exactly how this thing works.
The system he created is called CANSLIM, and it's the brainchild of William O'Neill, who you might know as the founder of Investor's Business Daily. By studying every market-leading stock he could find, going all the way back to the 1800s, he managed to boil down their common traits into this powerful 7-letter acronym, and each letter, as we're about to see, represents a critical piece of the puzzle.
And there it is in all its glory. CANSLIM. Each one of these letters is an essential checkpoint. We're going to go through every single one, piece by piece, to build a complete profile of what a potential superstock really looks like.
Now, this quote is so important because it cuts right through a common mistake people make. A lot of folks see the charts and think, oh, CANSLIM is just a technical system. But no, a portfolio manager who actually worked for O'Neill sets the record straight. It is 70% fundamentals. It all starts with a company's real-world performance.
Okay, so let's dive into that first part. The first few letters of CANSLIM are all about those fundamentals. They help us answer the most important question you can ask at the start: what makes a great company even worth looking at? So, the C stands for current quarterly earnings. This is your starting line. We are not just looking for companies that are profitable. We're looking for companies with strong, recent, and ideally accelerating profit growth. It's the clearest sign of a business that has serious momentum right now.
And here are the hard numbers you need to look for. You want to see quarterly earnings per share, that's EPS, up at least 25% compared to the same quarter last year. Same thing for sales. And hey, if that growth rate is actually speeding up, that is a huge, huge bonus. In fact, O'Neill's research found that the really big winners often showed EPS growth of 70% or even more right before they took off.
Next up is A for annual earnings. And this is key because let's be honest, any company can have one lucky quarter. The A confirms that this isn't a fluke. We're looking for a solid track record of growth over the long haul. We want sustained success, not some one-hit wonder.
The checklist here is pretty simple. You want to see annual earnings growth of at least 25% for each of the last 3 years. You also want to look for a return on equity, or ROE, of at least 17%. That number basically tells you how good the management is at turning shareholders' money into actual profits. It's a huge sign of an efficient, well-run company.
N stands for new, and this is the story, the catalyst, the thing that's creating all the buzz and getting the market excited. It could be a revolutionary new product, a brilliant new CEO, or even something as simple as the stock price hitting a brand new all-time high after building a solid foundation. Something new has to be driving the excitement. Then we have I for institutional sponsorship. You want to see the smart money. You know, the big mutual funds, the pension funds, buying the stock. Their massive demand is the fuel that really drives major price moves. But here's the catch. You want to avoid stocks that are already over-owned by everyone.
Yeah, there's a sweet spot. The ideal time is when the big institutions are just starting to discover the story. So a good rule of thumb is to look for institutional ownership that's below 85%. Why? Because you want to get on board while there's still a ton of potential buying power left on the sidelines, ready to push the stock even higher. So there you have it. We've just covered the what, the fundamental traits of a truly great company. That's honestly half the battle. Now we're going to shift gears and look at the when, using technical signs from the market to pinpoint the absolute best time to buy.
Finding a fantastic company is one thing, but timing your purchase is absolutely critical. You can have the best company in the world, but if you buy it at the wrong time, you're not going to make money. These next letters are all about the market factors that signal the perfect moment to jump in.
S is for supply and demand. Look, it's basic economics. A company with a smaller supply of shares available to trade, that's often called a smaller float, can see its price move up really fast when demand kicks in. But the most critical part here is demand. You absolutely have to see huge, above-average trading volume as the stock is breaking out to new highs. That is the undeniable footprint of the big institutions getting in.
L stands for leader or laggard, and the rule here could not be simpler. You only buy leaders. The CANSLIM system is laser-focused on the top 1 or 2 stocks in the strongest industries. Forget about the cheap, beaten-down stocks. You want to own the company that is already proving to everyone that it's the strongest of the bunch. And how do you measure leadership? Well, here's the tool, the Relative Strength Rating, or RS rating. It's a simple score from 1 to 99 that shows you how a stock's price is performed compared to the rest of the market. The rule is to focus only on stocks with an RS rating of 80 or higher. That means it's already outperforming 80% of all other stocks out there.
Now we come to M, for market direction. And O'Neill himself said this is the most important letter of them all. Just think about it. A rising tide lifts all boats, right? Research shows that 3 out of every 4 stocks will simply follow the overall market's trend. You can find the perfect stock, but if the whole market is sinking, chances are your stock is going down with it. You have to have the wind at your back. So how in the world do you know when the market trend has finally turned positive? Well, O'Neill developed a very specific tool for this called the follow-through day. It's a technical signal that happens after a market correction, and it basically gives you the green light that a new uptrend has likely begun and that it's safe to start buying those leading stocks again.
Here are the exact rules. After the market has been going down, you wait for the first day it closes up. That starts day 1 of a rally attempt. A true follow-through day happens on day 4 to 7 of that rally, when a major index like the S&P 500 or NASDAQ closes up at least 1.5% on higher trading volume than the day before. It's a crystal-clear, objective signal you can see for yourself.
Okay, so we know what to buy, and we know when to buy it. But the whole system falls apart without the rules for actually managing the trade. This last part is all about discipline, the absolute non-negotiable rules for cutting your losses short and letting your winners run. Listen closely, because this is the one rule you can never, ever break. It is the heart of the system's risk management. You must sell your stock if it falls 7 to 8% below what you paid for it. Every single time. No excuses, no exceptions. This is your insurance policy against a devastating loss. But on the flip side, you got to give your winners room to grow. So here's the rule for that. If a stock shows incredible power right out of the gate, we're talking a gain of over 20% in less than 3 weeks from a proper breakout, you are required to hold it for at least 8 weeks. This rule forces you to sit on your hands and let a true monster stock make its potentially huge move. I love this quote because it perfectly sums up the entire philosophy. CANSLIM isn't about gazing into a crystal ball and predicting the future. It's about methodically stacking the probabilities in your favor. By focusing on these proven characteristics and sticking to ironclad rules, you are putting the odds on your side. So, in the end, the system is the roadmap. You now have the checklist, you have the rules of the road. But just knowing it isn't enough. The real secret to success, the thing that separates the winners from everyone else, is the discipline to actually follow that map, day in and day out. The only question left is, will you? Thanks for joining this explainer.